Chapter 36 Stock Screeners. Stock screeners are the most vital key to finding 9 to noon stocks. They are also very useful for long term picks when you search for certain types of companies to trade. Use screeners to identify where money is and where money will be. As you first look for long term investments, try to find companies you already know about. This will streamline and simplify your investment research. After you identify, approve, or reject potential assets, you can use stock screeners to find companies with compelling fundamental buy signals. Stock screeners simply take any certain set of parameters into account and spit out the resulting stocks. You can filter by price changes, key statistics, accounting statistics, earnings, net margin, book value, and more with Yahoo Finance under the Screeners tab. With these options, you can configure custom screeners to look for undervalued stocks, growing stocks, active stocks, industry-specific stocks, foreign holdings, and any other circumstance you can think of by combining the many filters Yahoo Finance offers. Try quickly finding potential investments by combining your filters into a concise stock screener. Other great websites for long-term stock screeners are Finviz, Chartmill, and StockFetcher. Finviz works similarly to Yahoo Finance, but you can look at additional filters such as percent of shares short, dividend payout ratio, and technical factors. Chartmill lets you look at specific underlying corporate fundamental analysis through their analyzer alongside more technical factors like support and resistance levels, flag setups, and moving averages. Lastly, StockFetcher lets you directly analyze values in technical indicators like the relative strength index, stochastics, and MACD to identify potential swing trades. All of the aforementioned screening websites provide tremendous starter screeners to help you find potential movers. With this narrowed down search, you can quickly build a diversified portfolio or possibly make a few picks to complement your long-term indices. If you put in the time to research here, you can find previously unheard of stocks that may outperform your overall portfolio. For 9 to noon trading, you will almost exclusively look at price, percent gain, and volume. With these three factors, you can quickly identify 9 to noon stocks before the market opens and fluidly use screeners to find new positions as the morning develops. Before the market opens, you want to see a high pre-market gap to create a significant opening volatility. These breakouts serve as catalysts and more market players enter 9 to noon stocks and turn them into morning high flyers. These are the stocks where money quickly flows in and out of the order book as trading intensifies following large gains. Fundamentals are completely thrown out the window here as you focus solely on technical analysis. Screen for stocks priced between 20 cents and $20 with a daily gain of at least 10% and with high volume relative to when you look at the screener. Note that if you use Yahoo Finance's screener, you'll have to constantly update the page and refilter by highest percent gain to find newfound gaining morning stocks. Be especially careful with cheap stocks under $2 and only look for very qualified stocks with enough volume to support a day trade, as these stocks tend to have the least volatility and highest spreads unless the pre-market pays particular attention to it one day because of surreal gains and potential trades. Jack, stop wasting time. Don't waste time. Okay, sweet, still recording. So we're going to cut out that last paragraph, just do it again. Ending at refilter by highest percent gain to find newfound gaining morning stocks. Be especially careful with cheap stocks under $2 and only look for very quality stocks with enough volume to support a day trade, as these stocks tend to have the least volatility and highest spreads unless the market pays particular attention to them one day because of surreal gains and potential trades. This price range is a general average of stocks that trade well through technical analysis since they correlate to lower floats and faster price movements thanks to increased volatility and momentum. These stocks also much more easily move due to catalysts and pre-market trading activity in general. High-priced stocks outside of this daily movement range may present good trades, but they often simply stay flat after an initial run-up through the day since they are more difficult to move because of their often higher floats. As for percent gains, 10% may sound high, but this movement is easily attainable by tons of 9 noon stocks every trading day. High initial run-ups are crucial for trading because they put investors' spotlights on a stock that can be further traded using technical analysis for gains. High initial percent gains, especially before the market even opens, also shows the underlying stock can move quickly, a great quality if you try to get in and out of technical trades in a matter of minutes. In a boring day with a few movers, you may lower this figure to 5% in hopes of finding an early morning setup. There will be slow days in the market, but you have to trade constantly to capture the largest gains when a stock suddenly goes from $2 to $6. When you run your stock screener, sort the results by largest daily percent gains. These stocks are the most likely to move because they have the highest initial momentum. Additionally, high percentage gains can correlate to low floats since the limited supply of sellers quickly gets purchased. Low floats help you make consistent profits as the time price movements using technical analysis as long as there's enough volume to support active trading. It's difficult to predict a perfect volume level because markets quickly increase in daily volume as 9 and noon stocks take off. Look for volume that is high compared to the other stocks in your screener. The higher the volume, the better. Note that average volume in 9 and noon stocks really helps you predict the volume influx after a large pre-market gain. Here is an example of a recent mover, MICT Inc. And then we see MICT looks like a really big early morning bounce, huge pre-market gain, up about 183% after the day finished on Friday. You can see they had a huge spike up in the morning because they closed the previous day at 30 cents and they opened at 80 cents. And then they fell down to a low of day at 62 cents and then sort of bounced back up, had a big run up, and went to their high a day around 95 cents. But the important thing to see here is that there were about 10 million shares traded, and the average volume for this stock is 130,000 shares, especially considering their lower market cap. Clearly, the average 130,000 or so shares exchanged dwindles compared to the almost 10 million traded on this single day, especially considering that MICT's float is around 6.55 million shares. The best way to scan for 9 and noon stocks is with live data through a broker-provided screener. With live data, you will see gaining stocks as soon as possible, ready to load up on a chart and analyze a potential trade. Yahoo Finance tries its best to get accurate data quickly, but the site sometimes slightly lags behind the market. Additionally, Yahoo Finance does not display live pre-market data in screeners. See if your broker's stock screeners record pre-market changes. Pre-market gainers between 20 cents and $20 are 9 to noon stocks. For simplicity's sake, you can use Stock Market Watch's pre-market movers list. As I write in this book, this list is the first website result when you look up pre-market gainers. This free online scanner shows you the top gaining and losing stocks as shown below. It is a perfect screener for finding 9 to noon stocks at the beginning of the trading workday. Then we see our top gaining stocks for the day and our top losing stocks for the day, given the pre-market history. Although you might be tempted to buy top losing stocks, perhaps thinking that they will bounce back up during the trading day, these losing stocks generally maintain flat prices throughout the day, just like expensive stocks. Poor performance tends to repel investors, whereas strong performance attracts them and fosters larger gains based on technical analysis. As you look over the pre-market gainers, only pay attention to the ones with significant volume. In other photo above, we would focus on Watt specifically since it is the only individual stock with high volume. 3x indicates that DWT is a leveraged fund. Once the market opens, try to find good trades on these stocks, perhaps buying them as they break the VWAP and selling as they shoot over the top of the Bollinger Bands. Then transition into your live screens provided by either your broker or Yahoo Finance to find newfound daily gainers and potential trades. Similar to before, look for high volume gainers only, say above 250,000 shares intraday. In case you're curious, here's how Watt played out after its initial run-up. Then we see the stock breaks through the VWAP in the morning, has a huge run-up after that as the moving averages support it. In a trade like this, try to buy when you see the stock clearly break through the VWAP, lowest final value line under the 9 to noon period, under the 9 period and 20 period moving averages. From the early morning breakthrough of around 606 after a large pre-market gain, the stock continued to rise up to 794 at noon, as shown above. 31% gain before a colossal rise over $9, as shown below. Take profits as you see fit and try not to be too greedy. Bulls and bears make bank, but pigs go broke. And then we see they continued to rise after noon, all the way up till $9, and then had a downtrend for the rest of the day, especially after they came below that VWAP. Not all pre-market gainers will form perfect setups. Many prime 9 to noon stocks prove tough to trade. Simply move on and search for better setups in the morning until you find stocks that work for you. As you initially start trading, try focusing on one position at a time. If your comfort level increases and you feel the need to grow, start working with multiple stocks at this time when you see extremely strong setups in different companies at the same time. Volatility explodes right after the opening bell, and stocks can shoot up or crash down quickly. Learn to find reversals by tying your orders alongside moving averages and the VWAP. As time goes by, your trading will drastically improve with experience. Keep your positions calculated and try to know exactly how much you want each position to be worth. As you improve, you can increase your average trade size, perhaps scaling in or scaling out as prices move. Stick with what you believe in for the long term as long as you can outperform the market, since short-term losses may dwindle compared to potential long-term gains. Otherwise, turn to indices and outperforming funds. Long-term screeners and robotic investors based on technicals and statistics rarely outperform human portfolio managers trading 9 to noon. Screeners give you options and open 9 to noon stocks for active trading. They also help you find technical swing trades that may complement your underlying fundamental long-term investments. If you're interested in expanding your portfolio with actively managed outperforming stock trades, grow with 9 to noon stocks and the subsequent workday.